Good afternoon, friends. I'm going to show you today how I acquired over $20 million in real estate in just a little short time with the profits that I made from Bitcoin and other blockchain crypto projects. And I'm going to share with you that experience. And so as we go into the Bitcoin blockchain bull run, how you may take advantage of that and keep a lot of your bag as you're making millions of dollars. I'm very excited about this bull run here that's going to be starting soon. I don't believe it's actually completely started. I'm going to give you some insights today on what typically happens. I've been through many crypto cycles, and so I'm going to show you today that experience. So get your pen, get your pad out, and if you find this information helpful, share it so that friends don't get wrecked. Because a lot of people get wrecked during these bull runs in crypto. I'm also going to give you insights on why crypto as a whole is going to take its massive bull run. Okay, so let's get into this first. Let me give you a little background story. In 2014, I built the biggest Bitcoin mining facility in Utah. And how I built that was I had a lot of inventory because my computer companies, PC laptops and Zydex, we sell a lot of computers. So I had millions of dollars in GPU, graphic processing units, video cards, and I hooked them up to mine Bitcoin during that time period. And Bitcoins are really, really cheap, just a few $100. And obviously, you know that Bitcoin just breached $42,000, bounced back down, dropped down a little bit to like 41-ish. And we think it's going to go pretty high. But I'm going to tell you why it's doing that. So a couple things, ETFs, BlackRock, Fidelity, and all these major institutions are now applying for Bitcoin ETFs, as I've talked about in my previous videos. All of crypto is like, what, $1.6 trillion now. And our analysts say that once all these get approved, it's going to probably rise by 2025 to over $10 trillion market cap. You can do the math, 1.6 trillion to 10 trillion. That's a massive gain in market share. And when that happens, obviously all the tokens rise, right? Not all, but many tokens rise. I know a lot of you are going to comment and ask, hey, Dan, what should I buy? Should I buy Bitcoin? Should I buy whatever? I'm not going to tell you what tokens to buy. As you know, I'm a hedge fund owner and manager of the Ugly Unicorn Crypto Hedge Fund. Our investors have done very well this year. Returns have been great, while also mitigating risk. And that's a big thing because a lot of times people will just ape in and buy tons of Bitcoin because they see it going up. And a lot of times it's a fake, right? And meaning right now Bitcoin's gone from what, 15,000 something up to over 42,000. And a lot of people are like, oh man, I got to put everything in there. But the problem is a lot of times you'll see a correction down to like the 20s again here in this situation. So I would never go all in. I've always been a big believer of dollar cost averaging, right? Now, how our fund is a little bit different is we don't invest a huge amount strictly into Bitcoin. We buy a lot of ecosystems because crypto is software. Crypto is simply just software. And so we look for projects that have a docs team that's intelligent. We know who they are. We look at the roadmap, and we also look at functional utility. Now, the smaller tokens, also known as alts. So alts are smaller blockchain tokens, right? The alts typically have a big lag. And so we predict our massive rise in vaults and alts going into next year and into 2025. And obviously Bitcoin and Ethereum and some of the base projects can rise as well. Now remember, just a moment ago, Bitcoin was 70,000 a Bitcoin. It drops, down to 16,000. That's a huge drop, and that could happen again. But there are those two big things that are happening. One, the ETFs that are pent up that can increase the market cap to over 10 trillion by 25. And the secondary thing is the Bitcoin halving happening in beginning next year. So that's a major catalyst. Now, what is Bitcoin mining and what's a halving? Okay, halving is basically the difficulty to increases by double when you mine Bitcoins. What is mining? Mining is simply transaction processing. So if someone sends a Bitcoin to another person, it processes that transaction. Think about that as like merchant processing. When a credit card is used, the merchant processor charges it, it gets processed, and then it sends. Now, the crazy thing is this: there's only 21 million Bitcoins. They estimate that 6 million have been lost because people lost their passwords, and over 19 million have been mined. So there's a very finite amount. But when all these large institutional buyers like BlackRock and Fidelity start funding their ETFs by accumulating Bitcoin, you can see that the demand goes way up and supply is fixed. And that's why the rise that you're seeing. Now, it's the perfect storm if you see two of these things happening at once. You see the ETFs that are pending, and then you also see the Bitcoin halving coming up in April. That's crazy. That's like Mentos and Coke. It's just baking soda and vinegar. It's just like, all right. So for you home gamers out there, just a couple things. Never invest anything into crypto that you're not willing to lose. Again, this is not financial advice, just experience that I've had. You don't want to put like the majority of your personal net worth into crypto. Personally, now I like to keep maybe like 10, 15%, 20% max when we really have the data behind it, but not much more than that. And how I bought millions and millions of dollars in real estate just in that last crypto run that we ran up into 2017. That's how I bought my building, our headquarters, which is crazy. Incredible 5-acre, 50,000 square foot facility. And I bought tons of strip malls all down Utah, down State Street, as well. A bunch of housing developments, duplexes, all those things back in 2017. Unplug my radar detector. And what I did though is when Bitcoins did the run up, I had an exit strategy, because a lot of times people will ride crypto or stocks and things like that all the way up and not take profits. Now, one caveat: if you take profits, if you take profits in less than a year, usually you're going to pay short-term capital gains, so you're going to be taxed like way high. Versus if you hang on to it more than a year, you can talk to a CPA about that. So that's why I'm not a big trader, because let's say you're paying 40 something plus percent on trades, whereas you're paying, let's say, 20 something percent on a long-term hold. This applies to real estate. That's why I don't flip real estate. I think you have to have a lot larger return to be able to offset those tax consequences, right? Now, I like real estate though, because if I do take gains on crypto, whether it's short or long term, that real estate, I can do segregated cost segregation and depreciation on those properties, so I pay less taxes. And that's a really important thing. Now, you also want to make sure that you keep very good books on all your crypto transactions, and you have a CPA who can calculate those. I've been through an audit a few times in my life, and I was one of the first 20,000 users of Coinbase originally, and they audited like a lot of us, and it was tough. But the good news though is I kept good records. My CPA was competent and she did a great job, and everything went smoothly without any major issues, right? So what should you do right now? Look, I've always talked about dollar cost averaging. If you scroll back to my previous videos, right now, if someone enters into any sort of crypto, it may go down, and then it may go back up. Long term, the hope is that it goes up. Now, one thing we do in our Ugly Unicorn Crypto Hedge Fund is we earn yields. So normally when you buy Bitcoin, you don't earn any return on it. You just hold it and then you hope it goes up. That's like buying a building and having it empty. We earn yield on our investors' crypto positions, and we provide liquidity for DeFi exchanges. And what does that mean? When someone trades one token for another, there's an exchange fee. That's how Coinbase makes their money. They charge fees on exchanges. We supply the liquidity or money for decentralized exchanges, and we keep a huge chunk of that profit and we distribute that to our investors. This is why when Bitcoin dropped 75% just a little while ago, our fund only corrected 17%. I mean, that's like more than a 50% market outpace, which is incredible. risk mitigation. It's always climbing up a mountain on the way up, and it's like falling off a cliff on the way down. So risk mitigation is the key. I've seen people just get wiped. And you're going to see it again here. You're going to see a lot of people like, oh, I'm making all this money. There we go, we were back. You're going to see a lot of people buy in as it's going up, and then you're going to see a massive drop, obviously. There's always corrections, and you're going to see people lose tons of money because they rode it up and they fell off the cliff. Don't let that happen to you. Make sure you take some of your profits and have a plan to do that. Okay, if you want to invest in the Ugly Unicorn Crypto Hedge Fund, you have to be an accredited investor, okay? Direct message me. I also posted a link in my stories. I'll keep posting that. We have a lot of investors deploying money into our fund right now, but you need to be accredited. If you're a home gamer, be very careful with Coinbase and centralized exchanges, because if they go out of business, you could lose all your money. Now, Coinbase does have a thing called Coinbase One, and they have an insurance policy up to $1 million, which is more, I think, for hacks, but it doesn't cover bad investments and things like that, and I don't think it covers if they go bankrupt. So be very careful. You don't want to get FTX'd or anything funky like that, right? If you're also, what I recommend for home gamers is you use a Ledger Nano. I have a Ledger Nano X just for some basic home stuff, and you can store in a hard wallet all of your crypto. But remember, whenever you engage on a crypto project online, a DeFi project, anything like that, it opens up a contract approval. If you don't close that approval, even if you have a hard wallet, your money can be stolen. I've had friends that a year, 2 years later had money stolen on their wallet, and they thought they were safe because they had a hard wallet. Not so, okay? So make sure you understand closing contract approvals. With our fund, it's great because we close all our contract approvals. We have multi-factor authentication. We have to have multiple people do any sort of transaction approvals on different devices and different locations. All these different protocols to keep investor money safe. And when you're managing other people's money, you gotta do your best to keep things super safe. Okay, this is a lot of information, so you may need to watch this again. But the only ask I have, notice I'm not selling you some stupid course or any of this weird stuff here, okay? All I'm asking you to do is simply share this information on your social media so other people don't have the chance of getting as wrecked as much. We want to make sure that people are safe as they can be, okay? All right, that is it. Share this video right now. You guys have an awesome day.